lower shadows, right? Not really enough of a buy signal, no hammers, but nonetheless we're getting some lower shadows. Okay, and that is right around the 172.50 area. Okay. Now let's look at a 30-minute chart. April 3rd, morning star, piercing pattern, okay. Bullish engulfing pattern. So essentially we had a group, and markets going from lower lows to the same lows. So essentially we were getting reversal signals right around the 172.70 area. Even if you waited for a close above that little resistance area, you see those 3 or 4 or 5 sessions, you see a little resistance there with the engulfing pattern and all that. Even if you waited for a close, it would have been a little above 174. So essentially, by using the intraday charts, instead of just the daily charts, this is where you would have gotten the buy signal on the daily chart, which means you wouldn't have bought it because it's not a good risk reward. Okay. By using the intraday chart, your intraday buy would have been down there, which is probably at least 100 basis points lower. Now, because you're trading with the daily chart, your target is the daily chart. So what you've done is you've found a hidden support area you would not have seen on this daily chart by going intraday. Let me show you an example again. This is the daily chart. Right. The target is whatever time frame you're using to initiate the trade, that is the time frame you should be used to set your targets. If you're trading with the daily chart, even if you're using an intraday, to get early reversal signals, if you're a daily chart, I would be looking at that. So here, the market closes at what do we have here? Bearish engulfing pattern, right? Now, it closes here on April 6th at 122.29. Is this worth a short? And again, because a price target is subjective, I'll show you what I'd be using. I'd just be using the pivot low there. So essentially, the stop would be there, and the pivot low would be a potential support area. So the risk reward, not very good. Now, let's go to an intraday. Okay, here we have a 60-minute chart. So this is April 6th also. Okay, that black candle was April 6th. So to your right with the light blue shading, that's April 6th. On the 60-minute chart, see the reversal signals we got? The doji. Okay, and even if you wanted a little extra confirmation, okay, you may have waited for the close into the doji there. Okay, be a bearish engulfing pattern. Remember, if a black candle wraps around a doji, it's still a bearish engulfing pattern. So essentially, you would have gotten a sell signal at 123.05, okay, instead of 122.29 on the daily chart. So you would have gotten an earlier sell signal. As I mentioned before, if you're trading on the daily and using the intraday to get an earlier signal, your target normally should be based on the daily chart. But if you happen to be home and you see this and you're trading here, and on the intraday chart you see the markets tending to build some long lower shadows, like on the right side there, some piercing patterns, nothing wrong with taking some profits. Okay, swing traders. Using an intraday chart to see if the market is holding support or resistance. Okay. Here, a daily chart. Now, we have the support area shown by the 2 red lines. On May 17th, that was pretty close. Was that a successful test of the lows made with those red lines? And what we could do is go to an intraday chart to see what kind of signals we got on May 17th to see if indeed that was an important confirmation. So here's May 17th. This is a 60-minute candlestick chart on May 17th. What do we have in the red square? A bullish engulfing pattern, a morning star. Same thing, same date on May 17th on the 30-minute. This, by the way, I didn't mention this. This is a variation on the Morningstar. You could have more than one small real body between the black and white real body. And this is a 15-minute. Same thing. So 3 different time frames. We're going to be looking at using multiple time frames intraday in a couple of minutes. But 3 different time frames saying, okay, the market definitely, although on the daily chart, you really can't see if that was a really important test of support. But looking at these intraday charts, you say, definitely, that was a successful test of support. Now, this is good for both intraday and swing traders. Swing trading. Use multiple time frames. It doesn't happen that often, but if you get multiple time frames, intraday time frames, like we saw before, showing a bottom or a top, I would be all over the trade. So here, on this daily chart, we had a Morningstar was confirmed at 125.93, and on July 19th, we're going to go to an intraday and show you what we had on the intraday. So this was confirmed, let's round it off, at around 126. Okay, look at the intraday here. Okay, on the 15-minute, at around 125, just rounding it off, that is a hammer. That lower shadow is twice the height of the real body. Okay. What do we have there on the 30-minute? Again, on July 19th, in the red rectangle. Morningstar. Okay. Okay, that Morningstar was completed at 124.88. Okay, now remember, on the daily chart, the Morningstar was completed around 126. So you're looking at reversal signals over 100 basis points earlier than you would have gotten on the daily chart. And then on the 60, yeah. On the 60-minute, what do we have? A piercing pattern. When you get signals like this, and normally I won't go less than 15 minutes. If you get a 15 to 30 and a 60-minute, all giving you various candlestick signals, this is a very high probability trade. So, and here it was completed at 124.88. So essentially you had 3 different time frames confirming a potential bottom almost 100 basis points before you would have gotten it on the daily chart. Never trade without knowing about the news. And the reason for this is if there's an important number coming out, stand aside. Okay. Obviously, there are going to be times where a surprise news item comes out and the surprise news item can overwhelm the technicals. There's no doubt about it. I'm not enough of a pure technical analyst to say all the news is discounted. I don't believe that. If you get a surprise news item, the market could blow through support or resistance. The Japanese say that just because the water's calm, don't think there aren't any crocodiles. You could have all the technicals lined up and a surprise item comes out, you have no control. But if you know a balance of payments are coming out, an unemployment number is coming out, why take a trade in front of it? It's a coin flip. So, for example, here, the water looks fine.